Hey everyone, how's it going? End of the month for August, and what we have seen for the euro has been a little bit of a slump. So there's a couple things that I need to address here as far as the coverage of the euro, just because I still am trading and analyzing on sentiment. Everything that I do is essentially sentiment trading. There's a lot of high sentiments. We're trading on sentiment right now. We're getting a lot of signals. So this week I've already generated 3 signals. The one idea that I would generate for this video is that for the euro, the bad news, there's been a good amount of painting the picture in the newspapers and with all of the headlines. Bad news is good news. So it's a very stupid way of saying that, obviously the EU is having market turbulence and is dealing with some certain factors that are market specific versus the EU facing the threat of extinction. So that's something that the retail trader needs not to understand at this point. However, it is, like I said, if you want to make money in this world and you want to buy, it's a buyer. You have to be willing to face a buyer's remorse because the obvious picture is negative. And so the idea is to stay biased on the negative side because it's going to help you emotionally. So what I'm seeing right now is the redemption value. So there is redemption value in the euro right now at 115, or 111.56, and basically the euro is not facing extinction. It's not facing the threat of its existence. So we're not saying that we should go to parity. So the idea that we're in a mode where, yes, perhaps the EU is really threatened to the point of disbanding and all hell breaking loose in Euroland and abroad, to the point where we're going to just drive through parity with the US dollar, which is obviously a very nightmarish scenario, which could potentially boil the markets. So there's a redemption value at the price of 110, 111 for it to go back up to 112, 113 and perhaps gang bust and to do some damage as the euro typically does. So any strength from the US is also strength for the euro. Now there's also redemption value that I think is a lot more precise and is going to be profitable within the next couple of weeks, which is the British pound sterling against the euro. So what I would do as the small would-be trader, I would short the euro against the British pound sterling. For one, there is a redemption value, and so what we've experienced is a deterioration in the British pound. And at this point, the redemption value equates to what is essentially going to be increasing net exports and good business in the UK in exports. So what that means is that there is a good amount of space on the upside or on the downside of the euro against the British pound sterling. And we're also emotionally we're also compensated very well by being able to sell. So this is a market where we should be selling, right? So that's why you don't want to have buyer's remorse. So let's go ahead and sell the euro against the British pound sterling with caution and obviously with risk management in place. And let's see what happens until the middle of this month. So until the after the end of the second week. So let's make it until that would make it for the end of the third week of oh my gosh, September. We're in September. So into the third week. So we'll make it until the 17th, and let those profits ride up. And when you come back and say, hey, look, this was a great trade, here is why. Because there is a space, a vacuum that's created within that cross pair that makes a perfect technical trade. It's a technical trade. but it's also in the near term. So you're going to make money by selling the euro against the British pound sterling. Okay. So two things. First of all, there's redemption value in the euro, in the British pound sterling with respect to the euro. There is a buyer's remorse, and whether somebody entices you into thinking that you should be an aggressor in this market is morally, we'll say, reprehensible, right? And then so there's a greater demand in the U.S. dollar thanks to higher yields that are pushing up and the expectations of a rate increase. There is a decoupling that is persistent, that is existing right now as we speak, in between what is the financial, what is the story, the financial news and the financial story, and what is real. And what is real is the present, what is presently occurring, what is happening at this very moment, in this very week. And so, like I said, with the news being bad, it's very hard to understand how we can make money outside of trading on sentiment. If you're trading on sentiment, you can still buy and today, if you would have bought the euro, you might have been a little bit crazy based on reading the news. The news being bad from the EU is still good news because of the price that we're at, that we're not essentially looking at the euro's existence failing and going towards parity. That the case is not to go towards parity at this point. So that's the big idea. Anything else? So the synopsis. Headlines and developments are painting a picture. Okay, so the idea that the central banking system is manipulating things is the idea that the news and media is painting a picture. It's just simply there's a decoupling, and the actual news is what you need to trade on, and understand that this news is mostly rumors, and that the rumors are purported to be factual when they're not actual developments and not actual events. Recommendation: discount the rumors, buy the euro on good news. Sell when there's bad news, and be on the negative, be on the sell side.